We are in June of 2021, officially halfway through the year and in the middle of one of the craziest real estate markets that we have seen. And if you are buying a house right now, you may be really confused and lost on how to craft the best offer and compete in multiple offer situations. Depending on your situation and relationship with your real estate agent, they may or may not be there to advise you on how to specifically write up a winning offer. So today, I want to share with you the 13 aspects that you need to consider when writing an offer. We're going to study these just like a training athlete would study their playbook before going into a game, so that by the end of this video, you will know how to craft a winning offer and be successful in multiple offer situations. So the first aspect that we're going to talk about is price. You may hear people telling you that price is the biggest thing that sellers look at when choosing an offer. But I can tell you firsthand from working with both buyers and sellers, this couldn't be farther from the truth. My advice and what I've experienced as working well with clients is this market demands your highest and best upfront. As a buyer, it's important, even if you're buying your first home, to go into this market and go big. Go big or go home. We want to craft your best offer upfront because right now, most sellers who are getting multiple offers are not going to be taking the time to look at all of the offers and say, okay, I would like to counterback this one or counterback this one. What they're doing, they're comparing them all and they're just selecting one of them right off the bat. If you see that a house is listed for $200,000 and you say to yourself, okay, I'd be comfortable offering $215,000, but if they wanted $220,000, I would give it to them, then just go ahead and write up that $220,000 offer. There's really no 100% way that any agent or any seller can tell you what those other offers on the table are. Price is not the only thing that matters. I would say probably the biggest second factor that sellers are looking at, and the number 2 thing that we're going to look at when it comes to offers, is your loan type. If you did not know this, there is definitely a hierarchy when it comes to loan types. When it comes to a seller reviewing multiple offers, it's important to understand how they may see and interpret your loan type. Cash offers are going to be and appear stronger than offers that use loans. But like I said, there is still a way to combat cash offers because every one of these aspects we're talking about today plays into the overall strength of that offer. So don't feel like if there's a cash offer on the table that they automatically have it in the bag over you. Second to cash offers, the next strongest loan type is a conventional loan. Now, this is because conventional loans require higher credit scores to qualify for them, and they also are usually requiring more of a down payment. Because of these factors, many sellers see conventional buyers as very financially stable and less likely to back out on the deal. I would say probably right around tied with conventional would be VA buyers. Even though the VA loan allows you to buy with 0 down, usually VA finances are very strong. And there are not many VA buyers that have to go through the entire process of qualifying for a VA loan, providing their eligibility certificate, and then actually for some reason can't buy the house. Now, below the VA buyers are the FHA buyers. FHA as a loan type is one of the most popular loan types, especially with first-time home buyers. But it is a loan that allows you to buy with a lower credit score as well as a smaller down payment. Even though there's absolutely nothing wrong with being an FHA buyer, I've bought homes with an FHA loan as well. This can be seen as a weaker loan type when compared to things like a conventional or a cash offer. A seller may interpret your use of a 0% down loan like USDA or down payment assistance as you not having enough money saved up for your own down payment. And you may also need assistance with closing costs. This may take extra money from their pocket or extra time to close, because typically down payment assistance program loans, as well as a USDA loan, will take closer to 45 to 60 days as opposed to some of the quicker close loan types. So just remember that you can ultimately, at the end of the day, buy a house with any of these loan types. The loan type that you use may influence how a seller perceives your offer and the overall strength of it. I originally was working with a client here in Central Arkansas who came to me pre-approved for a USDA loan. And quickly, after making lots of offers with her USDA loan, trying to get that accepted, we realized that the main reason that her offer was not getting accepted was just due to the loan type. In fact, I was even told by several different sellers' agents that we actually came in at the highest priced offer. So we were spot on price-wise, but the sellers were ending up picking other offers just because they felt like the other buyers had a more solid financial picture than my client did. Long story short, she actually was able to transfer into a conventional loan. And then as soon as we made our first conventional offer, that was the seller that ended up taking her offer and she got the house. So just keep that in mind. Loan type can play a huge part in your overall offer strength. The third variable that we need to look at when writing an offer is concessions. Now, a seller concession could be the seller offering to offset some of your closing costs or cover some of those closing costs for you. This is not something that I would recommend you ask for in a multiple offer situation. But I do see still several of these offers being presented to sellers. So the main thing that I want you guys to consider here is if you do have the funds to cover your own down payment and your own closing costs, that is going to make you look like a stronger offer to the seller than someone who needs help with their closing costs from the seller. Let's say that you made a strong offer on price and you're using an FHA loan. So you know that maybe the seller could see you as a little bit of a weaker loan type, but you have the ability to cover your down payment and you have the funds to cover your closing costs. Well, that could in turn make you and your offer look stronger than someone who's maybe using a conventional loan but needs help with those closing costs. So you can see how we're looking at each aspect of an offer and you're reflecting on this yourself and what you can do with your finances to see how you can craft this in the best way to win a house. Now, depending on your real estate market, earnest money may play a bigger or smaller factor in your overall offer. Where I am in Central Arkansas, earnest money is not a big thing here. But however, my family in Dallas will often add an additional $5,000 to $10,000 earnest money on their offers. So earnest money, if you are not familiar, is additional money that you are making as kind of a good faith deposit with your offer. Now, this earnest money differs from variable number 5 to writing an offer, which is a non-refundable deposit. These things are often mixed up and can be confusing. So something else that you could attach to your offer if you wanted to do so is a non-refundable deposit. Now, this is a lot easier for you to lose as a buyer. This is basically money that is non-refundable. You are saying, here is X amount of dollars, you guys hold on to it. If you don't close on that house, the seller keeps that money. But if you do close on that house, that non-refundable deposit is applied to your purchase. So you would want to be pretty positive that you are going to be closing on this deal if you offer that. Earnest money and the non-refundable deposits are just little extra pieces that can be used to show the seller that you are serious. Are you asking for any personal property? Now, this may seem like a silly thing in a multiple offer situation, but I do see it. So what I mean by personal property are things that are not like physically attached to the house that you would like to stay in the house. An example of this would be a refrigerator or a pool table. Now, I do not have a problem, and I do not think it affects the overall strength of the offer if you ask for the refrigerator to stay, if the refrigerator is advertised as staying with the house, because that most likely means that the seller has already had plans to leave that item or leave the pool table at no cost, and that they do not plan on selling it themselves or taking it with them. However, if you want to ask for the seller to leave their washer and dryer, their refrigerator, their pool table, or, outdoor pool cleaning equipment, and that is not advertised, those can be items that the seller may have wanted to take with them, may have wanted to sell, and you could be making your offer less desirable just because you're asking for those things. The seventh aspect to writing an offer is contingencies. This comes into play if you currently own a home that you are selling that you need to sell in order to buy your next home. The last two clients that I have worked with had made contingent offers on properties, and both of their offers were accepted. So if you are in this situation, don't feel like you are a lost cause. If you need to wait and have the sale of your house close in order to roll the funds from that sale into your next purchase, an important thing to stress if your current home is already listed for sale, and if so, is it already under contract? So make that point and write it into your next offer, because if it is already listed for sale or under contract, that is going to give the seller additional peace of mind. If your house has not been listed yet or it's not under contract, have your agent explain to the sellers and their agent what the market is like, where your current house is, and what the estimated timeline is for getting your house listed and under contract. This has definitely helped me get my clients' offers accepted, because if we know an exact date that the house is going live, we know when we're cutting off potential offers. This gives that extra peace of mind to the sellers to let them know that we don't anticipate the sale of your current home becoming a problem. Of course, if you're not going to be contingent upon the sale of a current home to buy the next home, then you would just leave that section blank and move on with your offer. If you have learned something so far, hit the like button on this video. A home warranty is the eighth aspect that you could write into an offer. Home warranties are not essential. It's not like an insurance policy. It's not something that you have to get for your house. It's just an extra add-on. A home warranty will typically cost a seller about $600. So that would be additional money coming out of their net proceeds on the sale if you ask for this. Unless you are super tied to it, do not ask for a home warranty if you are wanting to make a super strong offer. And keep in mind that a home warranty is always something that you can set up on your own through either monthly payments or a one-time payment of that around $600. I always advise every person to get a home inspection when buying a house. With that being said, you can waive that right if you choose to do so, but I do not recommend doing that. There is so much that a home inspector can find that even me or you, even if you are a contractor, that you may not see. Yes, you do have the right to waive your home inspection. Additionally, something that I have seen other buyers do is they say on their offer that they would like the right to inspect the house, but that they would not be requesting any repairs from the seller. So this would give you the opportunity to still do that due diligence inspection And if there was some really big deal breaker for you, you would be able to back out of that contract. But it is letting the seller know that from your initial walkthrough on the house and in your offer, you are saying that you do not plan on asking the seller for any repairs. Now, this can potentially make your offer look a little bit stronger than someone who does not write this in, because then the seller knows that they may not need to come out of pocket to fix things for you. At the end of the day, the choice on what you do for the home inspection section is completely up to you. You just have to do what is right for your personal family and the strength of your offer. There has been lots of talk about appraisals in this crazy real estate market. If you need a little bit of a refresher, the appraisal is done for the bank and to protect your lender. If you are using a loan to buy the house and make your offer, an appraiser will be sent out to appraise the value of the house and let the bank know if the house is at least worth what your offer is for the house. If you are using a loan, sometimes you can waive the appraisal contingency or offer appraisal gap coverage. Now, what this would look like is, say that we have a house listed for $200,000 and you offer $230,000 on that house. If the appraiser comes out and he appraises the house for the bank at $215,000, that means that the bank is only going to see the value of that house at $215,000. So the bank is not going to loan you more money than your loan on a total value of $215,000. In that case, you could, if you are willing and have the cash on hand, write up your offer covering the appraisal gap difference. So for example, if you made that $230,000 offer and you and your agent were concerned about the appraised value coming in low, you could write in that you would cover that difference between the appraised value and the purchase price. Now, if you're not comfortable with potentially covering any difference that could be, you can also write up verbiage in your initial offer to cover a potential portion of a difference to a certain dollar amount. So for example, this may look like verbiage that says the buyer agrees to pay up to $5,000 more than the appraised value, not to exceed X dollar amount total. So there are ways to kind of put a limit on the amount that you may be willing to pay over that appraised value. I will go ahead and flat out state that I have had buyers in this market get their offers accepted without any type of appraisal gap coverage. It just depends on the house. It depends on the demand for the house, and it can be an extra way to make your offer look stronger. And just to clarify, just because you say that you are going to potentially cover that difference does not mean that it may come into play at all. If you offered that $230,000 and the house appraises at $230,000 or higher, then none of that would come into play. The bank is going to give you that loan and you can move on happily without any extra money out of your pocket. Okay, variable number 11. This comes to things like termite clearance or other specific weather or insect-based clearances that you have to get for offers in your area. I live in central Arkansas, and Arkansas can be humid. Because of that, we have termites in this area. So it is a very common practice for every time there is a real estate transaction, there to be a termite clearance letter and a preventative treatment done on homes. Now, this is not necessarily expensive. I think it costs usually about $180 if there's a current termite contract. If there's not one, it could be about $300 to $350. If you are comfortable waiving that inspection or taking care of the cost cost of that yourself as a buyer, then go ahead and take care of that. Don't ask the seller to cover that cost for you. And that could be extra money that they're keeping in their pocket and could make your offer appear stronger than someone else's. The 12th aspect that is important for consideration when making your offer is your closing date. You want to make sure that you have your buyer's agent reach out to the seller or their agent and see if there's a specific closing date that would be advantageous for them. This can come into play if the seller of the house you're making an offer on is under contract on another home. They may be in what we call a domino deal, and they may need you to close on a certain day so that they can close on their next house. So any additional things that you can write up in your offer so that your offer is just ready to be accepted without any type of modifications can make your offer appear stronger. You can write in delayed or early occupancy addendums to accompany your offer. In the event that the seller may need to stay in their house after closing or want to rent the house from you before they move out, that would be a delayed occupancy. Now, when your buyer's agent reaches out to the seller or their agent, they may hear from them that they need additional time to move out and that they would like that courtesy with any offers. So if you are really interested in making a strong offer on that property and having a high likelihood of it getting accepted, you would want to comply to that request and allow them to stay in the home a little bit beyond the closing date. Now, this can be something that you guys agree to do at no cost, or they can essentially rent the house from you back on a day-to-day basis for a set fee. Now, in addition to this, early occupancy can also be arranged. Now, this would come into play if you need to move into the house prior to closing. Some sellers are going to be very against this. Other sellers may entertain it. This would really only come into play if perhaps your loan gets delayed, or maybe you're moving into state and you haven't found temporary housing. You're really, really close to closing and you can provide additional documentation from your lender saying that they do not foresee any issues with you actually getting to the closing table. Early occupancy, I would say, use it as a last resort in your initial offer. It may be something that you want to entertain down the road if you need it while you're under contract. Now, we talked through a lot of really important factors today that can help you win a house. So if you found this valuable, hit the share button and send it to anyone you know in your sphere who's also looking to make home ownership a reality this year. Make sure to click over here and check out the recent changes to FHA loans because there have been some awesome news released in regards to student loans that will put more purchasing power in your pocket when it comes to buying a house. I will see you in the next video.